Hello, welcome to this week's How's the Market, Pensacola. Boy, it's been a strange ride last week, wasn't it? I'm actually going to jump into our real estate numbers because I know this is the actual purpose of this. But I've had so many people calling me, asking me, hey, Shane, you're kind of a finance guy. What in the world is going on with GameStop? And should I be paying attention to it? Should I get in on it? What have you? So I tell you what, after we finish going over all this, and after the credits roll at the end of this video, I'll actually do a quick bonus. You can fast forward to it once you get all this information. And I'll tell you what's happening with GameStop and I'll tell you what's going on. So it'll be kind of a bonus. Just wait towards the end for that. But right now, let's get to our real estate numbers in these two counties. Let's go. All right, if you've never seen the show, then you don't know. But I always open the show with this slide right here. It says if we have between 6 and 7 months worth of inventory, we have what's called a neutral market. If we have anything greater than 7 months, we have a buyer's market. Anything less than 6 months is a seller's market. What the slide does not say, anything greater than 9 months is considered a hyper buyer's market. Anything less than 3 months is considered a hyper seller's market. So let's take a look at our two counties. And we're starting to see a little increase in inventory in Escambia County to begin with. And I'm seeing the increase down here in the luxury. So 700,000 plus. 700,000 plus didn't come up much. Okay, it came up, I want to say it was 5.2 last month. So it's 5.3. We're creeping a little bit more towards a neutral market. It's definitely still sellers, but it's not a hyper sellers like the rest of the county is. But look at this. This is the first time we've seen the 650 to 700 hit that threshold. It says anything under 3 months is considered a hyper sellers. It's sitting at 3 months inventory, so it's still definitely considered a sellers. Everything underneath that is still considered a hyper sellers. And those 100 to 250 or that first time home buyer mark, I'm still concerned with. Each one of those $50,000 price points breaks down to less than a month's worth of inventory. Although I think this 1 to 150 was a lot lower last month, it's now a little higher. We're not anywhere near it. This is where you'll get some of those reports from Zillow or some of those other places that we don't trust and says, oh, well, inventory has doubled, prices must drop. Shut up. If we go from 0.4 months to 0.9, you are right in the premise of inventory did double. Are we still seriously lacking inventory? Yes. So don't make the assumptions. Watch the headlines right now because people are actually going out there and writing stuff just as clickbait. Don't get me on that tangent. So here in Escambia County, pretty much everything is still a hyper seller's market. The 5 to 550 looks like it may be creeping up. And like I said, as you start to get more expensive, we're starting to see inventory rise just a little. Not much, not yet. But let's jump over to Santa Rosa County and see what's going on there. And, well, it's the same as it's been. I feel like Eeyore sometimes when I'm talking about Santa Rosa County. Well, it's the same again this week. The 100 to, 350. Every one of those $50,000 price points, all the way up to 350. Less than a month's inventory, 0.6, 0.6, 0.2. There's only 18 properties active. And look, if you look at our total actives in Santa Rosa County, it's gone down. It's 205 actives in every price point. And we're back to nothing at that 0 to 50,000 mark again. Nothing. So Santa Rosa County has got a huge inventory crisis, which I have been talking about for a while. It's kind of funny though. I actually did look at because it popped up on one of my memories when I was on Facebook the other day. Last year, January, so the last report of last year, and how in both counties we had buyers, neutrals, sellers, hyper buyers, and hyper sellers. So I was talking a lot about Santa Rosa County and this price point, especially that first time home buyer price point that everybody's at. I was talking a lot about that last year, but it's just gotten worse. And then all of a sudden, we don't have the buyers or the hyper buyers or even neutral markets anymore right now for the last, 3 months, 4 months, 5 months in Santa Rosa County. You can go back and look at all the shows. It's one of the reasons I'm documenting this. That's one of the reasons I do this show, is to document the ebb and flow, of what's going on in the marketplace right now. Right now, if you're looking at doing anything in the next 12 months, let's talk, let's chat, let's discuss things. Because if you're looking at doing something in the next 12 months, and I say that honestly, 12 months, meaning, all the way into January of 2022, let's start building plans right now. Excuse me. I have some properties hitting the market today, and to be honest, I've got one that I put a sign out and I put coming soon. I have 12 people that as soon as it goes active, I have to text. We haven't even really done any marketing yet. All right, all I have done is I put it as coming soon in the MLS, which means any other real estate agent can see it, and we put a sign out front that said coming soon. I've got people saying, please, we've got the pre-approval, just give me a call as soon as it goes active. Because we want to see it. We want to see it, and we're probably going to write an offer. I literally had 2 texts this morning going, do you have any offers on that property yet? Like, it's not active yet, it's coming soon. Right, do you have any offers? So you know that people are looking right now desperately. And the prices are, that particular seller's pushing it a little bit. We know what the last sold was, but we also know we got a new roof and a new AC and everything else, so we're pushing it a little bit. And just based on before it even hits the market, we're probably gonna get it. We're probably gonna get it. So that's where things are in both of the counties right now. Like I said before, if you're thinking about doing anything, shoot me a message, let's chat. I like it when people reach out 6 months in advance. I've had a few people go, I was hesitant to reach out because we don't plan on doing anything until the fall. I love it when we can talk now, because now I can put a good game plan together. All right, I know that there are some in my business, some coworkers or fellow real estate agents that really don't want to work with someone for 6 months. They're looking for somebody that wants to do something right now. That's fine. I don't mind helping someone who wants to do it right now. I don't mind helping someone who wants to do something 6 months or a year from now. So my best clients started with, hey, I need to get my credit score up 50 points or something. Cool, let's work through that. Let's come up with the plan. Hey, we need to build a little bit more cash reserves in order to do what we wanted to do. Cool, I like that. Let's do that as a plan. I met with a couple last week. They reached out because they saw one of my videos from a while back where I talked about let's use real estate as a college fund. So a brand new parent using real estate as a college fund. And there's a whole way that I can do that to where the tenants basically pay for the child's college. It's ingenious. What's that little meme that everybody's pointing? Mm-hmm. It is. It actually works out really, really, really well. I've got quite a few clients on that plan. And they said, hey, okay, well, we just found out we're pregnant. Good, and then you're starting ahead of time. So let's build up what we need to and come up with a plan so the tenants can pay for their college or trade school, whatever. All right, yes, I have my MBA. Yes, I have a graduate degree, but it doesn't mean that I'm pushing my kids towards college. Both my kids seem to decide to go that way, but cybersecurity is what they both enjoy. Anyways, long story short, stay tuned afterwards. Like I said, I'm going to go over what's happening with GameStop, but that is the market this week. All right. If you haven't subscribed, do me a favor, hit subscribe, especially if you're seeing this on YouTube. Do me a favor and hit subscribe, because I really am trying to get that up over a certain point, and I would love if I brought any value to you to actually hit that subscribe button. All right. Thanks for watching. Have a great week. I'm a man on a mission. My mission is to help people break through all the noise out there and don't need no permission. I want to help you get to actual truth. Don't you just want the truth? I'm sorry, I like that song. All right, let's talk about what in the world is going on with GameStop. What is happening, and did a bunch of people get rich real quick? All right, and can we do it again? Can we do it again, and did we miss something, and how do you get on that text? What has happened with GameStop is what's called a short squeeze. This is not the first time it's happened. It is one of the first times that you've seen a gathering of like Reddit users, folks not from Wall Street, doing a short squeeze. But a short squeeze is not new. It's absolutely not new. It is something that I've seen done over and over and over again. And I've researched, especially when I was going through my MBA courses, I researched these. These were case studies that you had to pay attention to. So what is a short squeeze? What happens? Basically, when someone looks at fundamentals of a company, and they go, okay, you know what? The fundamentals of this company are not good. So I think based on my tracking, based on my investment goals, this stock will go down, okay? And if you know anything about trading, and I'm not going to go into 101s or 102s or really details, but you've got what they call the bulls in the market. That's when people think the market's going to go up or this particular stock's going to go up. You have the bears in the market. That's what they think that particular stock's going to go down. There's an old saying on Wall Street that bulls make money going up, bears make money going down. People who get greedy or become pigs, well, they get slaughtered. Whatever. That was my pig sound. Sorry, that's all I got. Deal with it. So what this particular, there's a couple of hedge funds out there that did not like GameStop, and I can't blame them. If you look, excuse me, I hit the microphone. If you look at the fundamentals of GameStop, is GameStop even going to be around here in 5 years? When I look at the fundamentals of GameStop, I'm starting to think about, I don't know, Blockbuster. Because now you got the PS5 that just came out, the Xbox, all these, nobody's going to buy the games much anymore. And what exactly are they giving them for trade-ins? If you want to get a game, you just download it, right? Every once in a while you may pick up something, but for honestly, I think the fundamentals of that business are not as good as they could be. There's going to need to be a separate outlet. They're going to need to transform in order to survive. So these hedge funds said, listen, the stock's not worth it. Let's become a bear on this trade. There's nothing wrong with being a bear on a trade. I have stocks that I believe are probably going to go down, and I'm playing them a certain way where I think they're going to go down. All right, because if we can make money that way, cool. If I can make money on the bull, great. All right, I don't care. This strategy that they use was basically to say, okay, you know what? I think this stock is going to go down. So listen, can I borrow your shares of stock? Thousands and thousands and thousands of shares, right? Can I borrow your shares? What I'm going to do is I'm going to borrow and I'm going to give you an IOU that I will give you your stock back. And then they take the stock and they sell it. All right, so they borrowed it from somebody else, then they go sell it. And what they're thinking is the stock is going to go down. They can buy it back, turn back down and say, thank you for letting me borrow that, and keep the difference. Make sense? Keep the difference. That's called shorting a stock. Now, there are ways to do that with options, and we can talk about calls and puts and put strategies and call strategies and call spread strategies and put spread strategies, which is something I like to do. It's a lot less lucrative, but it's also a heck of a lot less risk. I mean, if it's max loss, I know what my max loss is going into every trade. Whereas these guys, what has happened is they sold it and they owed us. Remember, they borrowed this let's call it 1,000 shares, right? Just easy. So they got 1,000 shares here. They borrowed 1,000 shares and sold it for $40. So they made 40 grand, right? Well, what this online movement has done is they've actually targeted a few people who've made it very verbal and they have to report what they're shorting and said, let's put them out of business. So they all gather and make a run on that stock. Well, if they start buying the stock, supply and demand, the stock has to rise. So instead of falling, like the fundamentals say this stock should be doing, instead it's rising. So it went from $40 a share to over $400 a share. So that same 1,000 shares that they owed, if this person who borrowed it had to go to the market and buy it because he now owes to give it back to this person, he made $40,000, but he had to pay $400,000 for those shares. Well, that was just 1,000 shares. What happened if it was 1,000,000 shares? So I made 40 million when I sold them short, but now I have to pay 400 million to buy them back because I'm contractually obligated to give them back. So the definition short squeeze, it's when investors come in and they're looking at people that are betting on the market to go down, and they put so much pressure and so much money and people hold the stock. Where the stock rises, it squeezes this person out because they really can't afford it. There's that one particular hedge fund lost $3 billion doing this. $3 billion. Now they only had a $6 billion fund, so they lost half of their fund on one stock. So that's what's happening right now. I think it is not fundamentally sound at all. Have I got some trades on GameStop? Yes, I did some options, right? But again, I know how to work the options out to where I'm not holding individual stocks, and if this thing goes to the moon and I'm out because I bet on basically, hey, this thing's hitting a certain point, it's probably going to fall back down to where the fundamentals were by the time my option expires, and I'm not going to go into stock trading. If you want to talk to me about that, I understand enough about it, and I do enough about it to where I can compare it against real estate and all the other stuff. But do I have that? Sure. I did some of those trades, but it's all technical trading. And it's getting to a point where I read some articles over this weekend in the Wall Street Journal that there are some very prominent investors saying that this is nothing more than gambling. It's really just trying to short squeeze. I think we will start to see some of the backers on some of these online groups are going to start to have to deal with the SEC. Because if they go out there saying you need to buy this, you need to buy this, you need to buy this to try and continually raise the price to short squeeze this one person, they had even one trade thinking it was going to go down. So they're out there pumping it to go up, but if they're making money if it goes down, then they're going to be in serious trouble. Do I know that they do? I don't. I don't know if they have or not. Maybe they haven't. Maybe they really are just a pure short squeeze. But if you haven't followed Jim Cramer from Mad Money, CNBC's Mad Money, he actually came out, I think he tweeted Friday or Saturday, saying, folks that are on this platform that are really wanting to do things, you've won. Take your money, go home. Take your win. All right, so it was just a fluke thing, but everybody in the cab driver is talking about, but I'm dating myself, aren't I? The cab driver. The Uber driver or the Lyft driver is talking about short squeezes with me. I've heard people going, hey, do you own GameStop? Do you own GameStop? Do you own, should I refinance or use my equity line for my investment portfolio to get in on this quick money? No, you shouldn't. If you know exactly what you're doing and you want to play it that way, okay, would I go into debt for this? No. I have margins, they call margin, where I can borrow money from my brokerage account to buy or sell. I won't even use my margin for this. This is purely a speculative play. Most of my stuff is disciplined. One of the things I teach people when I start talking about real estate or I start talking about investing is staying disciplined. A lot of people always are shocked when I say in real estate, appreciation is a bonus. When we start talking about real estate investing, appreciation is a bonus. If you stay disciplined to that core and understand it's all about cash flow, that makes sense. Here, is it okay to speculate? Sure, but don't use more than about 5, maybe 10% of the portfolio as a speculative, because it's fun. All right, we're playing. It really is almost like Vegas. Do I say bet the farm? No. No, for most people, especially most people that are watching this show, don't bet the farm on that. That makes no sense. It makes no sense. But now at least you know what's happening, what a short squeeze is, and what's going on. So hopefully that brought you a little bit of value. Pay attention to it. I'll be interested to see how that works this week. And most people that are telling me that real estate's going to go down, and we seem to be squeezing that out right now because there's no end in sight right now. And there's nothing. Let me be very, very clear as I sit here and talk. February 1st, 2021. There is no economic data that I can see that is pointing to any downturn in real estate pricing in the foreseeable future. Nothing. I understand people are going to be like, oh, well, what about the forbearance? Yeah, we've talked about that in the last couple of shows. Nothing. I don't see anything that shows that. Okay? So there's your extra bonus stuff for the week. All right. Hopefully you learned something there and you've paid a little bit of attention and I brought just a little bit more value to you. Thanks for watching. Have a great week.